Hi, I'm Jarrad Brown, Australian expat financial planner based here in Singapore. Thank you for tuning into my video series. In today's video, I want to explore a relatively morbid and perhaps not that exciting a topic, and that is insurance policies for Australian expats. Now, we're not talking about health insurance here. We're talking about life, disability, trauma, and income protection policies. So what if you already have these set up in Australia or elsewhere, and then you move to Singapore or you move somewhere else abroad? What do you need to think about? Why should you review them? And what are some of the gotchas to watch out for when it comes to insurance? So let's dive right in. So there's a few critical questions to ask yourself when it comes to reviewing your Australian insurance. So if you have insurance either in superannuation or in your own name in Australia, and it may be a combination of the two depending on how your insurance has been structured, but these are some of the critical things that you'll want to review. First is, are you actually covered abroad? Have you read that you are covered abroad in your PDS? I cannot tell you how many times I've spoken to the insurance companies over the phone to be told that yes, your client is covered, only to read in the PDS that because they don't reside in Australia, they're actually not. So get it in writing and make sure you do your homework. Otherwise, you may find that you're paying for an awful lot of insurance for precisely nothing. The second thing to ask yourself and to review is, what does the claims process look like? Now, for a life policy, you may say, well, if I'm dead, I'm dead. I don't really care about the claims process unless I'm worried about what my family might have to go through. But more importantly, when it comes to disability or trauma or income protection, are you going to have to fly back to Australia? Are you going to have to get an Australian doctor to certify that you cannot work and you cannot do your job and therefore are eligible for insurance payments? What does the ongoing claim process look like? Where would you be covered around the world? These are the common things that you need to be asking yourself when it comes to reviewing the actual claims process. The third item to have a look at, and again, this is a relatively small one in Singapore particularly, but have a look at, is it actually tax deductible? In Singapore, it works in the opposite way to Australia in many cases, and that is that life policies, life insurance policies, are tax deductible against your personal income in Singapore. Whereas in Australia, they're not. There may be tax rebates if they're held inside super, but that's a different process to what we're talking about here. So you may find that you can actually save a bit of money by setting up your insurance in Singapore, for example, then cancelling the policies in Australia and claiming the deduction on that payment against your Singapore income. That the tax rates in Singapore are certainly nowhere near what they are in Australia, but it's a small saving nonetheless, and if we can claim it, then why on earth not? Again, important to seek advice from your accountant on that one. The next one to have a look at is your insurance policy stepped or level premiums? Now, what this may be obvious to mean is that a stepped insurance policy means that the premium is going to step up over time. A level policy, however, means that the premium will remain flat. However, in Australia, those level premiums may often climb depending on the rules at the time and how much money the insurance company is actually making. So don't simply believe that your insurance premiums are never going to increase just because you're holding a level policy. In some cases in Australia, a level policy will just mean that it's not going to increase by as much as a stepped policy. Now, in Singapore, that can be a little bit different. We've not seen large increases on level policies over the many years. So here it's just important to work out how much cover do you need now. Should it be a level premium? If you're young and healthy, often a level premium can be sensible to take out, particularly given that many of the international insurance companies in Singapore will cover you globally anyway. So an important one to look at, can you create some savings? And that brings us on to our final point, and that is to ask yourself, is it actually cheaper to take out the insurance policy in Singapore rather than my policy in Australia? This is a simple one. You can reach out to myself, reach out to your advisor, reach out to the insurers directly if you wish, and do a bit of a premium comparison around what that saving could possibly look like both now and into the future. My final point of this video is just to walk you through a couple of gotchas to watch out for. First and foremost, do not cancel your policies in Australia or wherever else they may be before your new policy is actually set up. A quote is a guarantee of precisely nothing other than if the insurer is happy with your application, that will be the price you will need to pay to actually enforce that policy. So certainly watch out for that one. The second one is to consider where you may live in the future. Are you going to reside somewhere that your insurance policy would cover, or are you not? Should you change the structure of the policy based on those future countries of residence? Are you going to need it in the long run, or is your employer going to cover it? So certainly an important one to look at. The next one is have a look at your employer cover and work out, is it enough? What happens if you leave the employer, change jobs, relocate? Should you hold an additional policy? And maybe that's only a top-up policy in addition to your employer cover. So certainly plenty to think about there. And finally, ensure that you've nominated beneficiaries on your insurance policies. Here you want to seek some advice from your advisor, from your tax agent, your accountant, around what the tax implications could be of your beneficiaries receiving those insurance payouts. Now that can work differently depending on who they are and depending on whether they are dependents or not. So very important one to have a look at and make sure that you're happy with the nominations in place and make sure that your loved ones would genuinely be cared for and provided for based on the coverage you have. I hope that's been helpful. I hope that's shed a bit of light on what is a relatively mundane topic of insurance, but certainly plenty to consider, some potential savings to be had, and plenty to think about when it comes to your planned residence and also the tax implications. So I hope that's been helpful. If you have any questions at all, drop a note in the comments. I'd love to hear from you. Please remember to subscribe. Really appreciate you tuning in, and see you next time.